So the big question is cryptocurrency just gambling? Now, almost everybody's probably heard somebody say this, whether it was your mum, your dad, your partner, a friend at a barbie. Someone's probably said this before. Or maybe you've said it to yourself at 2 a.m. after a bad trade. And honestly, most of the time when somebody says that cryptocurrency is simply gambling, they're right. Because for years, what I was doing in the cryptocurrency space, it was gambling. It was something dressed up as trading, but it was gambling. So today I want to directly address this question. I don't want to dodge it. In this video, I'm going to cover what separates gambling from actually trading in the cryptocurrency space, why most people think they're trading, but they're actually just gambling, and the specific thing that took me from gambling to trading, from torching accounts to actually being consistently profitable. Strap in, should be about 10 or 15 minutes, grab a coffee, let's go. So I have definitely done gambling in the cryptocurrency space in the past. I didn't realize it at the time, but it definitely was. So early on, I paid for an alerts product. This alerts product was promising 100x returns on simple pump and dump coins. So these new meme coins that pop up out of nowhere, skyrocket in price and then crash and fall to zero, seemingly overnight. These were coins that were specifically promised that they were just about to moon, and that the person providing these alerts had a statistical edge because they had inside information on some of these. Now, the way it worked was simple. I'd get the alert, I'd jump on it immediately. Now, the problem that I had with these pump and dump coins is that, and this is something that I didn't realize at the time, I was the exit liquidity for these people who are pumping these coins. I wasn't making a dime. I was riding these all the way up to the top, couldn't get out, and I'd ride it all the way back down to zero. I got absolutely smashed trading these signals, and it destroyed my account. So this was my first account with gambling in the cryptocurrency space that I thought was actually going to make me money. Now, the second one is something that you might have heard of before, and this was the Luna ecosystem crash. So I was heavily invested in the Luna ecosystem. I had all of the coins that were on the network. I was involved in the Anchor protocol where you could stake a stable coin and earn some pretty generous APYs. But I was buying everything because Luna was the standout coin of the cycle. It was going to the moon, and I was sure that this was my ticket to riches. Now, if you haven't heard, Luna collapsed. The entire ecosystem collapsed completely. And when it collapsed, and we all know how it ended, I lost everything. I had over $10,000 invested in this ecosystem, and the entire thing was wiped out in a matter of days. 10 grand plus, completely gone. No warning. Now, here's the thing. At the time, I didn't think I was gambling. I thought I was trading. I thought I was placing some smart trades in an ecosystem, and specifically in a coin that was set to moon this cycle. I had the charts open, I had the Twitter account feeds, I was in Discord groups, I had the whole lot. But let me be clear here on what I didn't have. I didn't have a defined edge in the market. I had no idea what my win rate was going to be on these trades. I didn't know what my average win or my average loss would look like. I didn't have clear rules on when I was going to get in on any of these trades or when I was going to get out of any of these trades. I hadn't set a predefined maximum risk per trade. I didn't have any kind of maximum loss per day, per week, per month. Didn't have a plan if it kept going down. I also didn't know what I was going to do if it kept going up. And most importantly, there was no way for me to know whether I was just being smart or lucky. Now, if you've got no plan, no edge, no rules, no risk caps, no clear exit and entry plan, and no way of telling the difference between skill and luck, you're not trading. You're gambling. It doesn't matter what you're doing it on, what asset class, what specific ecosystem you're investing in, you're gambling. And that was me for years. Now, the shift from gambling to trading for me didn't happen because I found a better signal group or a better coin to invest in. It happened because I got introduced to two fundamental ideas. Now, the first one is statistical edges. Now, you might have heard about this before. You might have heard me speak about this before in some of my earlier videos. But until I was introduced to this idea, I thought that trading was about being right. Picking the winner, calling the top, calling the bottom. Now, what changed for me when I was introduced to this idea of a statistical edge is that I finally understood that you don't need to be right most of the time. You need some sort of a trading setup or a system that over a large enough sample size plays out in your favor more often than not. Slightly more often than not. This does not need to be a 90% win rate. So the key takeaway for me here, and the thing that I learned when I was introduced to statistical edges, is that I needed to find something that had a slightly higher chance of it occurring than it not occurring. Okay, so I don't know when it's going to occur. I don't know what the distribution of wins and losses will be or when that edge is going to play out. But I know that over the long term, if I keep executing this statistical edge, I will make money. Now think about this from a casino's perspective. In a casino, they have a slight edge on every spin of the roulette wheel. So the house doesn't care if you win or you lose on the very next spin. Because over 1 million spins, they know that they're going to win. Because their edge is real and they just have to have enough reps occurring. This edge needs to play out enough times each day that no matter what the distribution looks like short term, long term, they make money. Now this is the same principle that I'm talking about as a casino, but the person that's sitting at a table is you, okay? You're the house. You're the one with the edge and the market is the punter. But, and this is a big but here, a big caveat, your edge has to actually be real, okay? You actually need to have a statistical edge in the market. And only then, if you take enough trades and you size them in a way that lets you survive long enough to let this play out, you will be profitable. And that last bit is where most people kill their trading careers. Their edge is not actually an edge. What they think is profitable doesn't play out in the long term. Now, the second key concept that turned things around for me was the idea of these mechanical trading systems. So before this, every trade was a decision, okay? It was about how I felt. So I was making decisions based on how I felt or what I thought was going to play out in the market. Every trade for me was in the moment, sitting down, looking at a chart and saying, this is what I think is going to happen, so I'm going to trade like that. Now, I've said it before, but that's not a system, okay? That's a vibe, and when you're a beginner, your intuition is probably not great. Now, with a mechanical system, there's nothing for me to decide in the moment, okay? The decision was made before I even sat down. Think about that for a second. All of these decisions were made for me before I even sat down to trade for the day. So for me, everything started to change when I was introduced to these mechanical trading systems, right? Because when I started running a real mechanical trading system with a real edge in the market, 3 fundamental things changed. The first thing is that I stopped blowing up my accounts when I was on tilt, because the rules didn't allow me to take those trades when I was emotional. They protected me from myself on my worst day, and that's something that you hear me say over and over again. Mechanical system has rules in place to protect you from the worst version of yourself. Now, the second thing that changed is that I stopped chasing trades, because chasing trades wasn't in the rules. And the third thing that changed for me is that trading started to become boring, because boring is what you actually need in trading. Exciting is not a good way to be trading. You do not want to ride the emotional roller coaster of trading, because you will end up with a blown account, feeling absolutely exhausted, wiped out, and done. So for me, the good days stop being exciting, and the bad days stop feeling emotionally devastating, okay? Everything got quieter and simpler in my mind. And most importantly, something that really changed for me is trading stopped feeling like trading, and it started feeling like I was running a small business. And that's the flip. Like, that for me was the core moment that I flipped, and it stopped being about gambling and started being about executing this statistical edge following a mechanical system in the market. So let's put this in plain English. The real distinction, okay, here's the direct answer to the question. The difference between trading being gambling and trading not being gambling. So trading is gambling if you don't have a clearly defined edge in the market, or your edge is just a vibe, a gut feeling. You have no trading rules, or your rules include words like usually, ideally, things like that. You have no risk caps, no maximum risk per trade, per day, per week. Your position sizing is based on conviction on the trade and not based on a clear risk management system. You're not journaling your trades. If you can't tell me your average win rate, your average win size, or your average loss size, and if you can't personally tell the difference between skill and luck in your own trading results, if any of those are true, then you are not trading, you are gambling. Now, trading stops being gambling when you have a clearly defined edge that has been validated by enough backtesting data or forward testing data. You have a clear system with yes or no rules that don't include maybe. You have clear risk caps that are not optional but are baked in clear rules of the system. You follow your position sizing rules regardless of how much conviction you have on an individual trade. You're journaling every trade, and most importantly, you're tracking execution, not just your P&L. That's the difference. This is where things switch from gambling to actually trading. It's not the platform, it's not the asset that you're trading, it's not the size of your account, and it's not how serious you are. It's all about the presence of a real system around a statistical edge, or the absence of one. Now, I get it. We've all heard about the volatility in the crypto markets. Every man and his dog's got a comment. They've got something to say on it. And I'm not immune to this. Now, my wife's friends think I'm a complete degenerate gambler. They don't get it at all. They hear Bitcoin and they think I am just off the rail. And that's fine. I don't need them to understand. And I understand it as well. These people aren't stupid. They've watched a ton of people lose their money trying to trade crypto. Now, for me, my response is not to argue with them. If anybody is genuinely interested, then I know that I can show them in writing specifically what my statistical edge is, what the rules of my system are, and what keeps me in the markets to fight another day. If you can do that, there's a good chance you're on the right track and you aren't gambling. You've actually got a valid trading system. So if the people that you love think that you're just gambling, the answer isn't to argue. It's to build a system that is serious enough that that question stops being a reasonable one. Now, this is the whole premise that I built the 3XP Academy around. One pattern with a statistically validated edge. Yes or no rules. No maybes. No gut feeling. A risk framework that is not optional, okay? Maximum risk exposure at any given time. Maximum drawdown limits for the day, for the week, for the month. A system that was mechanical enough so that every decision was made for you before you even sit down. So that, as I've said before, the version of you that's tired, emotional, and on tilt doesn't get a vote. And something that takes approximately an hour per day. The entire 3XP Academy is built so that when someone asks you, isn't that just gambling? You can answer them properly, okay? Not because you've got a clever line, but because you've actually got a clear system with a statistical edge that you can show them as evidence. Now, if you want to find out a little bit more about how the 3XP Academy works and how I help clients install a clear 60-minute trading routine into their lives in 90 days, there's a link in the description. You can go out and check out all the details. No pressure either way, but thanks for watching today. Like and subscribe if you got value from this video, and I'll see you in the next one.